Hi, I'm Jamie of Bubb-Sacklyn, a chartered financial planner from the UK and estate planning specialist at Melbourne Capital Group based here in Kuala Lumpur, covering the Southeast Asia region. Today, I'm going to touch on ways to save your loved ones potentially an absolute fortune in UK inheritance tax. Now, if you don't know what UK inheritance tax is or who it's applicable to, please watch the previous video and there's a description in the link below. There are many different ways in which you can reduce your inheritance tax liability, which could be up to 40% of your estate. The first and most obvious one is spend everything. Die with nothing and there is no inheritance tax due because there is no estate remaining. But other than that, there are other exemptions. For example, if I am a UK domiciled individual married to another UK domiciled individual or in a civil partnership, then I can pass them all of my assets without any inheritance tax applying because interspousal transfers of assets is free of inheritance tax. i.e., if my estate is worth £500,000 and I pass it to my wife, who is also British, then she can inherit that entire £500,000 with no inheritance tax applying. However, it may apply on second death if she passed away later. Next up is gifting. Now, everyone has an annual gifting exemption of £3,000, which they can give away. If you haven't used your £3,000 from last year, you can make it up by gifting away £6,000 this year and then £3,000 moving forward. There is also a small gifts allowance of £250, which you can gift to anybody with no limit of the number of people you can gift it to. Other very underutilized exemptions are the gifting from excess income. For example, if I earn £100,000 after tax and my everyday spending for the year is £50,000, I can gift away the difference, which is an additional £50,000 with no inheritance tax applying. Now I can gift that to people directly, or I can gift that into a trust, and we'll come on to that a little bit later. One option, which many grandparents do, is pay for school fees for their grandchildren out of their excess income by gifting it away. Aside from the gifting exemptions, anyone can gift any amount of money to anybody else and then be subject to the 7-year rule. This is where if you die within 7 years of making a gift, it could be clawed back into your estate and tax may be due on that. For example, I could give my friend £1 million today, and if I survive for 7 years, that gift is completely outside of my estate. If I die within 7 years, then tax may be due on that gift at up to 40%. Another exemption is the main residence nil rate band. Now this is where you have a property which you have lived in and you gift it to your direct lineal descendants. For example, children, grandchildren, stepchildren, etc. However, if you have no children, this exemption does not apply. Are you feeling charitable? All gifts to charity are exempt from UK inheritance tax. And if you gift away 10% of your estate to charity, then your inheritance tax effectively is reduced to 36% instead of 40%. Another way of reducing your inheritance tax liability is by establishing a trust. Now, there are a number of different trusts, and trust planning can be very complicated, so it's definitely worth speaking to an expert. There are many different types of trusts. Some of them give you access to funds, some of them pay you an income, or some of them are just outright gifts, but into a trust for the benefit of whoever that may be. Again, this is a very, very complicated area, and it's definitely worth speaking to a specialist ahead of establishing certain trusts. Lastly, another option, which is also very underutilized, is establishing a qualifying non-UK pension scheme, or a QNUPs. A QNUPs is a pension scheme based outside of the UK, but any assets that go into the QNUPs fall outside of your estate for inheritance tax purposes because it is a pension, and UK pensions are exempted from inheritance tax. So, in theory, there is no limit to the amount I can put into a QNUPs, but I have to prove that it is for retirement planning. It's not subject to the 7-year rule, and it's outside of your estate from day one. So it's a very useful tool as part of an overall financial plan. So if you have any questions regarding inheritance tax, if you believe it may be applicable to you, or you have assets in the UK over and above £325,000, please do sign up in the link below.